Hi guys, how are you? Mine this one, titanium. Welcome back to Investing MMT and Evidence-Based Economics. What is the difference? That Evidence-Based Economics goes a layer below MMT or views things a little bit differently than MMT. And I think it is important that I make a distinction between the two. I don't want to violate anything that Warren Mosler says, so that's why I call it evidence-based economics. Now, had some difficulties with my computer, my audio, my video, setting it back up. I have a very large monitor, and for some reason, it was not the video was not showing the aspect area that I wanted to record. My voice sounded worse than it does now, so it took a few days to get my computer back up and running. All right. Now, for you real progressive retards that are watching this, get off my channel. Go back to your free lunch over there with Steve Grumpy, and don't waste your time here. Don't waste my time here. Okay? I don't want to teach you anything. Besides, most of my teaching now is on Patreon for a disgustingly low price of $5. And if it was my way, I would do it for free. But since you guys attacked my channel, then I have to look for alternative means so you don't destroy what I did for the past 6 years. And you don't destroy what I do from here on in. Okay? So get off my channel. Bye-bye. See you. Go get your free lunch. All right? Now, for everybody else, let's continue. Let's start with the dollar index. We had a 1, 2, 3, 4, 5. I said I would buy if it came back down. I did. It broke out of the structure. Now it's falling back in. So, how do we play this? Well, there's a couple of ways to look at this. The first way to look at it is that we have a 1, 2, 3 move up. Okay, so this is a 1. This is a corrective move, and then we're going to look for a higher. Okay. Now, typically, what I would like to see, what will be ideal, is that we have a flag. It kind of forms in here and then breaks out. All right. But why am I remaining bullish? And I'll tell you why. We have two corrective structures. This is one, okay, and then when it dropped below, we have a flag below the flag. But the flag is heading in the wrong direction. Okay. If it was kind of doing one of these jobs, then I would be more bearish. Okay, but it's not. And the economy is not that bad where the dollar was just going to collapse. It's just, that's not the case. Does that mean that the dollar cannot go lower? Of course it can. Of course it can. But again, as long as it keeps coming down here, I'll be buying. Now, what's going to happen if this continues to come all the way back? Well, at that point, I'm going to redraw the structure, and it would look like this. So then the 3 is going to become where the 5 is. Well, let me fix that. So it would end up looking like this. Okay. This would look more correct to me if it was to continue to go down, right? So then when we get a 1, 2, 3, 4, 5, again, it leads to the upside. So another reason why I believe to stay bullish in the dollar. So let me put it back to the way I originally drew it. We'll just wait for this correction to end, and then we'll look for a 1, a 2, and then we'll see a 3 going higher. So let's take a look at the Euro index. So here's the Euro index. As you can see, we had a W pattern. It did break out. We went into a flag. Again, these flags usually lead to the downside. It did break down. So we had a 1, 2, 3 corrective move. Little spike, came down. We're below the structure. I think this is ultimately going to resolve to the downside. Okay. Taking a look at the volatility index for the euro, it's very low. Okay. We are getting to an area where we'll probably see some kind of big move come. So in volatility. So again, biases to the long side for the dollar for now. That's the message of the market that I'm getting. Taking a look at the Great Britain Pound Index, we have a 1, a 2, a 3, and a 4. Now it seems to be bouncing. It's holding right now, but it is making a little flag down here, which we are aware of, because the last time it came down, it pretty much bounced. This one is more of a flag. So if it does break, we'll take it on the short side. For now, we are long Great Britain Pound, Japanese yen. It's working out very nice for us, and we'll talk about that a little bit later. Taking a look at the Euro US dollar, we had to move down. Then we went into a 1, a 2, a 3, a 4, a 5. I thought this was going to roll over and continue lower. Didn't happen. It continued to go straight up. That's fine. We came into this flag pattern, and much like the way we observed in the Euro index, it has fallen apart right in here. Now it's bouncing back in. This formation usually does lead lower. Okay, so we had a break, a bounce. How deep is this bounce going to be? I don't know, but for now, again, the bias is to the downside. And again, I want to point out that just because it broke a trend line doesn't mean much. Okay, and I really want you to remember that because it's fairly important. Okay, if you're one of those support and resistance guys, and you shorted right in here, guess what? You got ripped. You got ripped. So don't do stupid shit like that. Okay, crossing of a line doesn't mean anything. So let's take a look at the Great Britain Pound USD. Let me stop here for a second, and I'll show you why you see this. This is what the dollar index looks like. You got one of these where it was kind of descending and then just fell apart, but it really had big problems. Okay, the pound had big problems, and it did that. But most of the moves were counter. Okay, except for this one. This is kind of sideways, but there were counter moves, and then you saw the drop. Counter move, drop. Counter move, drop. Okay, to get two of these at the same time, they're rare. Okay, so even here, you had the counter move and then drop. Okay, so now we have again a counter move. I was initially bullish. We broke out, went really nice for us. We went into that F flag type of formation, dropped. This is a 1. Then we got the correction. That was last week's trade, and then we got another drop. Okay, so it's a 1, 2, 3. Now it's consolidating inside. Let me draw that a little bit better. My mouse is a little too sensitive. So now we have some kind of wedge forming. I would look for another downside. Okay, probably not till next week or the week after, but that's what I am looking at right now. Euro Great Britain Pound. We got the drop, then a bounce, then another drop, then a bounce, another drop, and then finally, when we broke this support area, okay, it fell down. But the second time around, right in here, it broke out. Okay, but as soon as it came into this area, what does that look like? Once we came into this area, I said look for a pullback. Okay, why? Because it found resistance here before. So for now it's working out, but I would like to see how it's going to behave. It is respecting the trend line. Okay, so the next time up we could break out. Okay, where the euro will outperform the pound, and it's going to be interesting to watch how it plays out. Australian dollars. Couple of the guys that follow me, I gave them the trade that we should go short right in here. Let's first take a look at the big picture. We had a thrust up move. Now this is all corrective. Okay, and let me recount that for you. So this is wave 1 up. So then we have a 1, a 2, a 3, a 4, and we're looking for a 5. Okay, this is what we're looking for now. Now, it doesn't mean it's going to go there in a straight line, obviously. Okay. Now, we did short up here initially, and then once we came down, we had a W pattern. I said get out, got out, and now we've gotten a 1, a 2, a 3, and this is where I went short. Okay. Instead of it coming down, what it did is it broke out. Okay. So the break of the trend line doesn't matter. Again, to me, it doesn't matter. Now, to me, this whole move is a C, the whole thing. There's no, I mean, this pause here, it doesn't mean much to me. So it was a pause. Okay, we got a consolidation. We got a breakout, pull back, and another move higher. Now, what is important to remember is that when I say to you it's a half a position, then it's a half of a position. It means it could go higher. All right. It doesn't mean that you stop out because it crossed the line, because the overall picture is still negative as far as I'm concerned. Literally, it can come all the way up here, and I'll say, okay, put the other half in. So then you'll have a short position, let's say in here, and then you get another one here, and then your cost average is around here, and then it comes all the way up here, and then it comes back down, and then you'll be making the money. Okay, you have to be aware of why I say it's a half a position, not a full position. All right, sometimes I might say a third of a position, but the whole move to me looks as a 1, corrective 2, and then a 3. Okay, and then at this point is where we'll look for a higher move, giving us a 1, a 2, and then a 3. All right. Another trade that I gave some of my subscribers to follow me is this one, the Great Britain Pound Japanese Yen. Now, let's take a look at this whole structure. This is all corrective, right? All of it, this whole thing. So when you look at the past history, what it does is it has a thrust up move, and then it goes into this weird kind of tight consolidation, and then another thrust up move, and then this weird tight consolidation. So what we're looking for, another thrust up. Now they occur usually at these at this support area, support line. So I guess it was yesterday I said to the guys, I said, look, you know, this is probably going to turn into a thrust up move, and you can see the W at support. Okay, 1, 2, 3, and then it broke out. Right now it's pulling back a little bit, but it has broken the trend line. So the likelihood is that we had a thrust up. Now we're getting a pullback, and then we'll look for another wave up, another wave up. Okay. So here's a better description of what I'm talking about. These tight consolidations, right? Tight, 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 and then boom, off it goes. And the same thing happens in reverse. Okay. Well, you'll get a tight, 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 and then boom down. And I'll show you that later on. US dollar CAD, this is our long-term hold, okay? And we're looking for a very big move on this one. So this would be a 1, this is all corrective 2, and then we're looking for the move down as a 3. Now, last week I told you that it was breaking down. It has broken down. It has crossed the long-term support now, okay, and it didn't mean much because as soon as it broke it, it bounced. So let's take a little bit closer look. Now, what we wanted to see is that it kind of consolidates here a little bit, and then we can take the next short. We'll add to that. All right, very simple. But as you can see, it has been getting weaker and weaker because this used to be the valid trend line, and it's broken below. It formed a flag. We were waiting for this one to break down. It didn't. It bounced up instead. We did get the flag here again, broke this trend line now, and now it's working on the final and last trend line. So we had a 1, consolidation, 2, 3. Okay. US dollar ruble, we had that tight consolidation. It broke out, went into another tight consolidation, broke out again. I posted it right down here, and so far we are making money. Haha, US dollar Mexican peso. Remember how higher interest rates are inflationary for the currency, and the Mexicans raised the interest rate, and oh my God, go out and short the peso? Well, wrong. Okay, you people go out and you give $100 to some lunatic who claims that he understands stock markets, and for 40 years I've been doing this, and I got icicles hanging off my fucking nipples, and I'm the best, and I'm the greatest, I always make money. Yeah, okay, well, you're wrong. Okay, and I'll keep saying that. Look at this. Look at this. Straight down, came down into a wedge pattern, and boom, came down. Now it's broken 18. All the way from 22 down to 18. That's huge. That is massive. Massive. Okay, so don't give me this bullshit that higher interest rates are inflationary. They're not. Okay? It strengthened the peso. It didn't weaken it. That's not inflationary. So don't give me this garbage that the dollar is weakening, okay, because of we're raising interest rates. That's garbage. Okay? The dollar is in an up move. All right? Did the price fall here because of higher interest rates? No. How about here? No. Okay? Neither is this. This is normal. Okay? On the way up, it's normal. So don't give me this bullshit that higher interest rates are what is inflating the currency. That's garbage. And for you little MMT bots that come in here and tell me higher rates are inflationary, it's printing money, no, this bullshit. You don't know what the fuck you're talking about. All right? Don't be coming in here trying to tell me how things work. This is bullish. All right? Don't tell me this garbage, because that money that is printed out of thin air goes into savings, blowing up savings bubbles. That has nothing to do with inflating the price of goods and services. Okay, because of monetary inflation. That is garbage. Do prices rise because the cost of borrowing money goes up? Yes, but that is not monetary inflation. Okay? Get a clue as to what you're trying to talk about. I remember last week or the week before where it crossed this trend line, right? Gold. Oh my God, gold is, inflation is coming. Buy gold. It crossed the trend line. Every website that refers to trading was masturbating at this. What happened? Wrong. Okay? Why? Because there is not going to be any inflation. Forget about inflation. It's not coming. All right? It's not coming. So here's the deal. You crossed the trend line, broke the previous top, and fucking dropped. Wrong. It's a $50 drop right there. Okay? So all this nonsense that, raising interest rates, it is inflationary, it's monetary inflation, we're printing money. This is bullshit. This fucker is coming down. Okay? This bitch is coming down. I would not be surprised if it even breaks this area and goes even lower. Forget about inflation, people. Seriously. Not going to happen. Taking a look at silver, we have a 1, 2, now we're looking for a 3, and then we should get a bounce or it will fall apart. We don't know that as of now, but I know there was a lot of people masturbating back here at $21. Woohoo! Inflation is coming. There's no inflation coming. Forget about it. Taking a look at the stock market overall, it is definitely in an uptrend. It's kicking ass all over the place. Last Friday we got some interesting movement, and I think it's important to talk about in terms of understanding charting and so on. Now, a few things. Number one, we had an ascending wedge, broke out, went into this F flag, and it is at the top of the flag. So when you see a movement come down, spike down like this, it's not unheard of to see it continue further down, as we saw it here. Okay? Now, the next thing we want to take a look at is the way the market moved. was a thrust down move, and then we got a corrective move higher. I posted this on Facebook, and I said, look, this is corrective. We're going to see another wave down. Sure enough, we got another wave down. Okay, so now this becomes a 1, 2, and a 3 sideways. Now, we got another move higher, and then as soon as we got a move higher, boom, failed again. All right, so if we go back at this price level to here, it is where we were January 1st. So nothing really has occurred. But when you look at the overall structure, which is an F flag, then it will be like this. It will be a 1, a 2, and then a 3. That will make a lot of sense. And that would bring us down to around here, which is about, I don't know, 2380, 2370, somewhere in here. Okay. Now, how it behaves here, if we get a flag of some sort, and then we can take another short, which would bring us to the bottom of the channel. But we don't know that as of now. Okay. Now, I had a nice conversation with Edward Delzio, and he said, "Look, yeah, I don't see this being pretty negative. We got to keep things in perspective." And I think he's right. There's a lot of indicators and a lot of areas of the market that are still okay. All right. And it's important to have someone like that that can keep you balanced. And to me, he's invaluable. Sure, just there's always going to be parts of the economy that are going to be underperforming and things are not going to look good. Always, that's going to be the case. So you can't be always negative. And I think he is right in what he's saying. But that does not mean that we cannot have a correction. Okay, and how fast that correction can be. Nobody knows, but when you start seeing these kind of moves, would that happen at the end of the day, last couple of hours, and end of the week, and then in after hours you see movement, and then again, this is the kind of stuff that happens in a bear market. Okay, so it is reminiscence of 2008 for me. Now, does that mean that that's it? It's over? We are at the top? No. I said we're getting closer towards the top. That is a big difference. That is a very big difference. There's no evidence to suggest that we are at the top. We're getting closer to it, but we're not at the top. All right? So the bias has to always be on the background, long-term, higher. Okay? But again, it does not mean that we cannot get a corrective move back down here, and then maybe even deeper. Okay, it's still in a bull market. All right. Now, for you guys that come in here who are little MMT bots, who are going to sit here and recite MMT to me and think that you know what the fuck you're talking about, let's take a look at the credit check from Mosler. Okay, very, very valid. Things are heading in the wrong direction, right? Down, 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 and so on. Okay, this is very valid. But, I need you to understand something before you come in here and you start talking nonsense. That does not mean that the market is going to fucking tank. All right? Don't think you have the holy grail of fucking analysis and that's it. Credit is falling, we're screwed, everything is going to zero. Don't be fucking shift bots. And here's what I mean. Okay? Is it heading in the wrong direction? Yes, it is. The growth rate is slowing. But as of now, we are where we were back in September 2015. Okay? Market went up fine before that. And it was way lower, the growth rate. Okay? So don't think you have the holy grail of analysis. You don't. Take a look at consumer loans, credit cards, and revolving or whatever. Okay? Yes, it is heading in the wrong direction. Okay? But we were worse off in 2014. Okay? We have seen waves. It could literally head higher. This is possible. I'm not saying that it's going to go higher, and I'm not saying that this is not valid to be concerned. But this is not the holy grail of analysis. Okay? Don't come in here and talking to me about that fucking nonsense. I don't want to hear it. Okay? And the other thing I don't want to hear from you guys is when you're going to tell me that, well, after the first 100 days of Trump, that's when the market is going to crash. Or in 2019 it's going to happen because Gans guys told me. No, it's going to be 2018 because, this is going to happen. Or it's going to be, I have you MMT bots, you come in here, you always have this urge to predict. You don't know that. I don't know that. Nobody knows that. Okay? We'll know that after the fact. We'll just keep doing what we're doing. We follow the analysis. We do the work that we're supposed to do. And then when it happens, it happens. That's it. We'll be on the right side of the trade. I promise you. But don't come in here telling me what the real estate guys are telling me and what these guys are telling me and this Wave Elliott guy is telling me. And, by my analysis, the next one is going to be in 2026, the big one. And I don't want to hear it because it's crap. It's useless information. You're eating up, megabytes in my head. Okay, I need them for other more important things. So let's get back to the analysis. So another reason that I was concerned last week about the move in the market, and I think it could go lower, is that when you start seeing this tight kind of consolidation, okay, what this usually does is it leads a violent move to the downside. Okay, it's putting people to sleep. And then once it puts people to sleep, it just fucking tanks. All right? So this is another reason. And going back to my structures, right? It's the opposite of this, right? It's tight, 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 and then boom, up. Or in reverse, when it starts going up, it comes up tight, 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 and then boom, down. All right? So that is another reason why I thought... or I still think, I didn't think then and now I don't, I still think that we could get more downside. And again, very tight, and then we could see a drop. And as you can see, we are forming some kind of flag, some kind of formation down here. You can also see that if we go back to gold. And here it is with gold, right? Tight, 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 and then boom, off it went. So it's the same thing in reverse. All right? And look where we are now. So, keep that in mind. Taking a look at small caps, we had a 1, 2, 3. We went into this F flag now. So what we're looking for is downside. Okay? That's what we're looking for in the Russell. Taking a look at the S&P versus the NASDAQ. The S&P has been underperforming the NASDAQ this whole entire time. When we zoom in a little bit closer, I said to subscribers, the ones that paid a whopping $5, and I'm not making fun of them. I'm just saying that there should be a lot more people on there learning how to do this stuff. What you'll see is you'll see a bounce, right? And then it comes down, then you see another bounce, and now it came down here. And I told them that, hey, be aware of this. And sure enough, we got the bounce off of the S&P started outperforming the NASDAQ. Now, if what we expect is for it to come up here and then see how it behaves afterwards. Okay, so we still have some room to go, which again leads me to believe that the S&P is going to outperform the NASDAQ, which means that the NASDAQ probably is going to drop. Okay. Taking a look at bonds versus the S&P. The S&P has been outperforming bonds as it should, but as you can see now, it is starting to. It has kind of like this head and shoulders thing going. It is starting to underperform bonds, which is interesting. Okay, considering we're raising rates and we're going to have all this inflation. And just to pause here for a minute and talk about what Edward was talking about. Okay, so the earnings yield right now in the S&P 500 is 3.89%. Okay, but this is after tax. The 10-year yield is 2.16% before tax. Okay, so what he's saying basically is that the market will accept lower and lower earnings yield for the S&P 500, and the market will continue to go up so long as interest rates remain low. And I agree with that. I think that is a very, very valid point. Okay, he's correct. And when you look at it, yeah, historically, this is a ridiculous, yield. It's crap. But we don't live in the historical past. We live in today's world, and today we're in debt deflation. And the name of the game is price stability. Okay, it's not maximizing employment. It's not, trying to grow the economy. That's not what we're trying to do now. We're just trying to maintain prices the same and just keep blowing that savings bubble. That's the name of the game right now. That's the neoliberal agenda. All right. So when I when I say, hey, the market is going to go down, it's going to do this, it's going to do that, we're closer to the top, and I'm not telling you that, go out and fucking short everything in sight and hold and that's it, we're done. The whole thing is coming down to shit. It's not what I'm saying. And if it were to do that, guess what? I'll be buying hand over fist. All right. But we have to keep things in perspective. And again, I value Edward's opinion and anybody's opinion so long as you can give me some concrete evidence, okay? And I just say, well, the market's going to go up or the market's going to go down. And then it does. And it's like, okay, look, I was right. No, because to me that's useless information. Anybody has a 50-50 chance of being right on any given period, okay? I need more concrete evidence. And I think what Edward said, we should all listen to what he is saying, and he is correct, that the long-term picture should be to the upside. And when you look at the chart, guess what? He's 100% right. It is to the upside. We cannot deny that, okay? But that does not mean, again, that we cannot get corrections. We got corrections here, we got here, we got here, we got here. We got corrections all the time, all right? And that's basically what I'm saying, that we're probably going to get a correction. Now, is it going to be the top? You'll never know that. Not even Edward knows that. Not Mosler knows that. Not me. No, anybody knows where the top is going to be. All right? But we will know after the fact. So quickly, as the last part of this video, let's just take a look at some leading stocks. And what I also found interesting is that the market going up, only 10% of stocks have made all-time highs. Okay, so if you're in the other 90%, you probably didn't make all-time highs, and you probably didn't make money. Anyway, so let's take a look at Apple. Apple reminds me of this pattern right here, where it kind of breaks down, makes a new high, and then falls apart. You can clearly see it here. It was inside the pattern. Broke down, made a new high. The next move should be lower. Taking a look at Amazon, it's in a wedge higher. Again, we're looking for a downside move from here. Okay. Again, it doesn't mean that the bull market is going to be over. It just means that it's going to correct. That's all. Taking a look at Facebook. If it clicks, there you go. You take a look at Facebook, and you have a 1, a 2, and a 3. Okay, you can certainly look at it that way. But for me, I look at this as a great big 1. Might get a correction, and then we'll continue higher. Google, again, it's a wedge. All right, doing its thing. It's bullish looking, but I would not be surprised to see some kind of correction. Okay. Netflix. Okay, and this is that tight consolidation right here that we talked about earlier, right? Tight, and I would not be surprised to see a correction as well. And that would be the structure right here in reverse. MasterCard broke above the wedge. Let's see if it holds. Price line, big consolidation area in here, grinding higher. Nice little M pattern up here. Okay, let's see what that does. German DAX. Looking for a corrective move back down. This will be a 1, a 2, and then another wave down. Is not out of the realm of possibilities. For now, we have broken up above. We have an F flag. If it breaks below, again, tight consolidation. I would not be surprised if fast move down. Okay, and that's my reasoning for why I think the market is going down. Might be going down. UK broke out. You know, it's struggling in here. It's all over the place. Right. Japanese Nikkei. You know, whatever. Just broke above. If the yen falls, we're looking for upside in the Nikkei stock market. Nifty 50 broke out very nicely. Again, we have this nice tight consolidation. Moving higher. Boom, down. What else? Emerging markets. Now, emerging markets, you know, this is mostly China. And China has an inverted yield curve, which is not good. Okay, there's no reason in the world that somebody should be getting a higher interest rates in a 1-year or a 5-year treasury bond rather than a 10-year. So that's an inverted yield curve, and those bond guys are a lot smarter than the stock guys. So, you know, is that going to be a catalyst for a correction? Very likely. Very likely. We'll see what happens. Emerging markets is up against resistance. 1, 2, 3 move up in a wedge. This can be considered corrective. We could see further downside. And finally, VIX is complacency land. You look at the World Stock Index, it's in a wave 5 up. Possible M pattern topping. World Stock Index minus US. Okay. Same kind of pattern. It's all over the place. And REITs has bounced. Subscribers of Patreon, I told them this could bounce. This was a good entry. Risk reward wise, it has bounced. They're probably making some money and a good dividend. Okay, but again, we're looking for some kind of move down and then back up. And that's it for now, guys. If you want more of this, subscribe to Patreon, where I'll give you up-to-date information, trades, and so on. I will give you deeper understanding and analysis of MMT and evidence-based economics, how it really applies in the real world. And that's it for now. Thanks a lot.
Before this battle's over, the world will know that few stood against many.